In this video, we're going to break down exactly what investors should be watching, what metrics could potentially signal serious trouble ahead, and why some market participants are becoming concerned about MicroStrategy's business model. At the same time, we're also going to examine why there is still a tremendous amount of bullish news developing elsewhere in the crypto space, particularly around XRP and Ripple. By the end of this discussion, you'll understand both the risks and opportunities currently shaping the market. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we'll talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Let's begin with the topic dominating headlines right now. A lot of people are treating Michael Saylor's Bitcoin sale as if it were something unprecedented. However, that's not actually true. This is not the first time he has sold Bitcoin. What makes this event noteworthy is the size of the sale and the timing of it during a period when investors are already questioning broader market conditions. More importantly than the sale itself are two specific indicators that deserve close attention. The first is MicroStrategy's MNAV. For an incredibly long period of time, MicroStrategy traded at a premium relative to the value of the Bitcoin it held. Investors were willing to pay extra because they believed Michael Saylor's strategy created additional value beyond simply holding Bitcoin directly. Now, however, something unusual has happened. The MNAV has moved into negative territory. In simple terms, the market is beginning to value the company at less than the value of the Bitcoin sitting on its balance sheet. That is a major shift in investor sentiment. What does this mean? Essentially, the market may be saying that owning shares of MicroStrategy is no longer more attractive than simply owning Bitcoin itself. In fact, some investors may even be assigning risk to the company, fearing that future financial problems could emerge. When a company holding billions in Bitcoin begins trading below the value of those holdings, it raises important questions about confidence, sustainability, and long-term viability. The second issue investors should monitor is MicroStrategy's STRC product. This preferred stock product was designed to provide investors with an attractive dividend yield while maintaining a stable price around $100. The structure relies heavily on the continued success of the broader MicroStrategy ecosystem. The basic idea is that MicroStrategy continues acquiring Bitcoin. Bitcoin appreciates in value. The company's stock benefits from that appreciation, and management can then use various financial mechanisms to support dividend payments and shareholder returns. As long as confidence remains strong, the system functions smoothly. The concern arises if confidence begins to weaken. Recently, some investors have started discussing the possibility that STRC could lose its intended price stability. If that were to occur, it could signal growing stress within the system. Critics argue that much of MicroStrategy's success depends on a highly engineered financial structure. Supporters view it as innovation. Skeptics view it as a delicate machine that depends on continued investor enthusiasm. The reality is that nobody knows exactly how long this model can continue operating without disruption. Interestingly, history provides an important perspective. The last time Michael Saylor sold Bitcoin, it actually occurred near a local bottom for Bitcoin's price. In other words, what many people interpreted as bearish at the time ultimately turned out to be a buying opportunity. That historical precedent suggests investors should be careful before assuming that this sale automatically signals disaster. However, let's discuss the scenario that would truly create a black swan event. Imagine a situation where MicroStrategy's valuation continues falling relative to its Bitcoin holdings. The M&A becomes increasingly negative. Investor confidence continues deteriorating. At some point, the company could struggle to raise capital efficiently. If that happened, the entire feedback loop supporting the business model could come under pressure. In such a scenario, the company might find it increasingly difficult to maintain dividend obligations or continue executing its strategy at scale. The market could begin questioning the sustainability of the structure itself. If confidence collapsed completely, there could theoretically be pressure to liquidate Bitcoin holdings. That is the nightmare scenario some analysts are worried about. A forced sale by one of the largest corporate Bitcoin holders would likely create enormous market volatility and damage sentiment throughout the cryptocurrency ecosystem. Could governments intervene in such a situation? Some speculate that regulators or policymakers might step in if systemic risk became significant enough. Others believe the market would simply absorb the shock over time. At this stage, those discussions remain highly speculative, but they illustrate the seriousness of what some investors are monitoring. Personally, I don't believe MicroStrategy is facing immediate collapse at current Bitcoin prices. However, the concerns surrounding confidence, valuation, and financial engineering are real discussions taking place within the market. What's fascinating is that while everyone focuses on these headlines, another development has received far less attention, despite potentially being much more significant. Ripple continues making progress in areas directly connected to financial infrastructure. One example is Hidden Road being associated with the DTCC ecosystem alongside major financial institutions. Developments like these highlight something that many cryptocurrency investors often overlook. The true long-term value of blockchain technology is not speculation, it is utility. The most transformative use case for crypto has always been settlement, liquidity, and efficient movement of value. This was one of the original promises of blockchain technology: the ability to move money faster, cheaper, and more efficiently across the globe has enormous implications for the financial system. When you compare that vision with what many treasury companies are doing today, the difference becomes obvious. One side focuses primarily on financial engineering and investment vehicles. The other focuses on solving real-world financial problems. This distinction is why many XRP supporters remain extremely optimistic. They see Ripple developing institutional products designed for actual adoption, rather than relying solely on speculative investment demand. As more financial institutions experiment with blockchain-based settlement systems, many investors believe utility-focused projects could receive increasing attention. Whether or not that ultimately benefits XRP remains to be seen, but the trend itself is difficult to ignore. Now let's talk about the XRP price chart, because there are some remarkable signals emerging. One of the strongest indicators currently being discussed is the Relative Strength Index, or RSI. Looking at XRP's monthly RSI, there have only been a handful of occasions throughout its history where readings reached levels this low. What's particularly interesting is that every previous occurrence corresponded with major bottoms or significant reversal zones in XRP's price action. Similar observations can also be made when analyzing the weekly RSI. In other words, from a technical perspective, XRP appears extremely oversold based on historical standards. There are additional indicators supporting this view as well. Many analysts have compared XRP's behavior with XLM, noting that both assets have historically moved in remarkably similar patterns. In several previous cycles, XLM has often moved first, with XRP following shortly afterward. Because XLM has already shown signs of strength, some traders believe XRP may simply be lagging behind before eventually catching up. Taken together, these indicators create a compelling argument that XRP may already have established a market bottom or is very close to doing so. This is why many XRP investors remain relatively unconcerned about MicroStrategy-related fears. Even if significant challenges emerged within the Bitcoin ecosystem, XRP's technical setup appears to be driven by factors extending beyond Bitcoin alone. Of course, nobody can predict the future with certainty. Markets remain unpredictable, and risks always exist. However, The data currently available suggests that XRP's downside may be becoming increasingly limited relative to previous cycles. It's also worth remembering that XRP survived some of the most devastating events in crypto history, including the collapses of Terra Luna and FTX. Despite those massive shocks, XRP ultimately recovered and continued attracting interest from investors and institutions alike. If a future crisis involving MicroStrategy were ever to occur, there is a reasonable argument that capital could rotate toward alternative crypto assets offering different narratives and use cases. XRP would almost certainly be one of the projects included in that conversation. At its core, this entire debate comes down to a simple question: what creates lasting value in cryptocurrency? Is it financial engineering, leverage, and speculative structures, or is it real-world utility, settlement efficiency, liquidity solutions, and institutional adoption? Many XRP supporters believe the answer is obvious. They argue that blockchain technology was created to improve how value moves around the world, and they see Ripple's strategy as being closely aligned with that objective. Meanwhile, critics of the current Bitcoin treasury company trend argue that the industry has drifted away from blockchain's original purpose and become overly focused on speculation. Regardless of where you stand in that debate, one thing is clear: the coming months could be extremely important for both Bitcoin and XRP. MicroStrategy's performance, institutional adoption, market sentiment, and broader macroeconomic conditions will all play a role in determining what happens next. For now, XRP's technical indicators continue suggesting strength beneath the surface. The narratives appear to be improving. Institutional developments continue arriving, and if even one major catalyst emerges, the market could shift sentiment surprisingly fast. That is why many investors believe we may only be weeks or months away from a significant recovery phase. The early signs are already beginning to appear, and if momentum continues building, the next move could be much larger than many people currently expect. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.